What is up, everybody? Happy New Year. This is Kelly Cook. We are live here on YouTube, and it is Tuesday, the first Tuesday of the year after taking a week off between Christmas and the New Year's. And we are coming in hot today. All right, we're coming in hot. We're going to be talking about the predictions for 2026 because why would we not? Now, we make a lot of assumptions, or maybe one would call predictions, throughout the year to an extent, right? What's going to happen next month, next quarter? We'll see how things play out. But we're making predictions on the housing market in 2026. You got to know these as well. And if you're watching a replay, please comment below. Let us know if you agree or do not agree, because I don't expect all of you all to agree with me, or even the people I bring up on the news articles, right? Who are the smart people, if you will. But that's okay. That's what America is great. That's why it's one of the reasons it's great about living in America, right? We can disagree and agree to disagree potentially. There's a lot of leads in there, right? Should be a rapper. All right. But we're going to get into this 2026 predictions, and we'll make it fun and exciting as we possibly can so that you don't sit there and fall asleep or want to get off this channel. My job is to fully inform you and do so in hopefully an entertaining a way, just enough so that you can get through the next 20 minutes or so. But this will be good, guys. 2026 is going to be a year that blank. Better, worse, more the same. What do you think? Guys, if you don't mind, if you're participating, right? Some of you guys are live right now. I can see. If you don't mind putting it on the chat, that would be great. Otherwise, the comment section on the replay would be phenomenal. Okay. But we're going to rock and roll and not rap on this episode here today of 2026 housing market predictions for Phoenix, Arizona, and a little bit of the national flavor. We'll start macro like we usually do, and we'll go micro from there. So I'm going to share my screen and we are going to jam. Here we go. Housing market will warm up. This is from AZ Big Media. Housing market will warm up in 2026, economists say, and here is why. All right, now they're citing Zillow here, okay, which is, a big source, not necessarily the most reputable source, but nonetheless, they pay economists, and that's their full-time job, so they should hopefully have some more insight than all of us when it comes to this, you would think, okay? But what they're saying is that there should be a housing market that warms up a little bit across America. Now, we're going to get to Phoenix here in just a second, but bear with me. We're starting from a macro standpoint, okay? The housing market is finally settling into a healthier state with buyers and sellers starting to return, said chief economist at Zillow, okay? Buyers are benefiting from more inventory and improved affordability, while sellers are seeing price stability and more consistent demand. Each group should have a little bit more breathing room in 2026. Now, how that's possible, either on one side or the other, typically, I don't know. I'm not an economist, apparently, so I don't know the answer to that question, but it seems a little odd to me, right? But here's the headlines to look at here, guys. Home values will rise modestly in 2026 in the housing market, okay? Here you go. You want numbers? Here they are. Zillow economists expect U.S. home values to grow 1.2% in 2026 after national values are generally flat, or were, I should say, in 2025. Okay, 1.2% from Zillow. You heard it here first. Fewer owners will be underwater as prices firm up, okay? That's good. Mortgage rates will hold above 6%, not below, above 6%. What do you think about that? Do you believe that? Or do you think we'll see, for, just the sake of it, a 5 in front, 5.99? I take it, because optics matter and psychological aspects matter when people are making big decisions sometimes. So I would love to see a 5.99 at some point in 2026. And believe me, I think, here's my prediction, we will see that. Just saying. Okay, could be wrong, but just saying, okay? Now, existing home sales will climb slightly. This is a big one, guys. Don't underestimate this one. Zillow forecasts 4.26 million existing homes in 2026 will sell, a 4.3 increase from the year's projected total. That's good. Why? Well, I think you guys all get it, because it's good because so many things come from home selling, whether it's a loss for the seller who's currently selling, whether it's a big gain, an equity, and they cash out. People, we're one of them, obviously, right? Real estate agents make some kind of money, right? Typically when that happens, but you have lenders, you have title people, you have insurance people. Contractors, flooring people, roofers, the list goes on and on and on. You guys understand, inspectors, the whole 9 yards, right? So a lot of people are, quote unquote, fed, make their living off of what happens when a home sells. So having home sell, even if it's not so good because prices go the opposite way, are still a good thing overall. Okay, I would argue, right, for a lot of the economy and people putting money in their pocket to then support their own family, etc. Okay, new construction will see its weakest year since before the pandemic. That's interesting. 2026, what do they say about that? Is shaping up to be the slowest year for single family home construction starts since 2019, following a notably weak year in 2025. That's interesting. But here, how many permits? Single family starts are trending 5%. This is not good, guys, especially for Phoenix, below last year's pace of the latest reading in August. Okay. It's a further 2% drop from that pace would be in 2026. Okay. So that is not good because we need supply. We have a housing shortage problem here in America, guys. And I know you're looking around going, Kelly, there's all kinds of places available for sale right now. I can go down a list. There's 24,000 in Phoenix alone for sale. Yes. On the market today for sale. That's a lot. It is. But longer term, as that gets eaten up, longer term, we need more supply in the market. Guys, did you know that in Phoenix, the current monthly housing supply, there you go, is at 4 months. It stands today at 4 months. So what does that mean? That means that if no other homes come on the market, which won't be the case, but if they did not come on the market in 4 months, all homes would be sold and there'd be nothing more for anyone to buy living in the Phoenix metro area. That's kind of crazy, right? 4 months does not seem like that much of inventory because it really, at the end of the day, is not. 6 months, 5 to 6 months is considered really more balanced than even 4. Okay, so that's interesting news to consider. All right, apartment renters will see relief. Rent affordability is expected to continue improving in most of the country after a year in which 37 of the 50 biggest markets saw incomes grow faster than rents. Guys, did you hear that? That's good news. 37 of 50 of the biggest markets in America saw incomes grow faster than rent rates. A median home household would spend roughly 27.7% of income on typical U.S. rent as of October, the lowest share since August of 21. Zillow forecasts multifamily rents to rise just 0.3% 26, giving incomes a chance to catch up even further. Single-family rents are projected to climb 2.3% as many buyers delay their home purchase. So that's going to bring rent rates up a little bit. The lifestyle of the renter will emerge as a force. Kidfluence will steer rental demand. That's influence. That's interesting. What is kidfluence? Well, 37% of renters now have a child younger than age 18 at home, up from 33% just a year ago. That's wild, guys. Demographics matter. Okay. All right. So families bringing those preferences into housing decisions as well. They need bigger places, blah, blah, blah. Okay. We all get that idea. Inflation savvy home features are becoming mainstream. All right. This is interesting. AO evolve as a helpful assistant in TC work. I don't know about that, but it will continue to evolve and help a little bit. Here we go. Phoenix. Let's jump in. Y'all ready? Phoenix housing market outpaces national trends again in 2025. Now, this is 25, right? We just finished that year, but it did outpace right here. The October data saw Phoenix with a 3.8 increase in closed sales compared to the first 10 months of 24. Comparing 25 to the same month last year locally, closed sales increased by 4.9% compared to a nationwide increase of only 1.5%. So that is good overall. Greater Phoenix homeowners again saw their home equity increase in year-to-date numbers, with the median price of a single-family home matching the national average at $480,000. Is that true? Well, that's partially true, guys. Oh, don't peek. Don't peek. It's coming. All right. It's look, 470. Now they said 480, but this is as of January, yesterday, actually, with only a sample size of 173 closings to go off of. But if you go just a little bit lower, what I say, guys, do you remember? Okay. See that right there? I'm going to screenshot it. Golly, go back and watch my December before Christmas, I think 23rd episode, YouTube Live. I covered the monthly median sales price, median, not average, median for Phoenix. And I said, you know what? It was at 480, but I think that's a little skewed. It'll probably end up around 400 to 450 to 455. And sure enough, the end of December reading bottomed out at $455,000. So I finally got something right. How about that, right? So guys, that is cool. What does that mean? That means that the annual median, the monthly median sales price was trending up to be about 470 to 480. It ended at 455, which is along the lines of where we thought it would be based upon boots on the ground and in the trenches with our own home sales, helping clients out ourselves every single day. Okay. Now the article is saying 470. So there's some discrepancy there, but Cromford Report, I'm going to default to that all day long because that is where people pull their information from to begin with, for the most part. Okay. Now, this is interesting. Here we go. Let's break it down on a couple of different suburbs. Phoenix, so far in 25, Phoenix has a smaller month supply of inventory, only 3.8 months of inventory. Headline, Scottsdale saw the median home price rise 3.5% in Scottsdale to $1.18 million as a median, not average, median home price from 1.14 in the first 10 months of 2024. The number of new listings rose 4.2%, taking the supply of inventory to 4.8 months in Scottsdale. Why? Because prices are higher. Mesa, in the East Valley, Mesa also saw a significant increase in the number of days on market from 53 to 68 in 2025. Okay, that's a 20% increase, right? Homes are sitting longer. Gilbert, okay, this is good. We're just rapid fire here, baby. Here we go. The data show that new listings rose 11.4%. Pending sales increased also 4.7%. And closed sales were up 8.2% compared to 2024. And the median sales price dropped slightly. Oh, I'm sorry. Median sales price, 1.7% increase from $595 to $605 last year. So Gilbert went up. Goodyear, we won't go through all these, but here we go. Goodyear, so closed sales climbed 27%. Okay, Peoria closed sales rose 5.6%. And new listings also went up. So inventory is going up as well as demand. In surprise, numbers were generally strong for the year. Okay, closed sales are up 6.1%. And they went from 430 to 436, an increase in the value, as well as Peoria did as well, from 529 to 537. Okay, they are rocking and rolling, guys. Everything has gone up in 2025 from the year prior. And by the way, there are more home sales in 24 than there were in 25 in the Phoenix area. So overall, you're seeing an increase of pricing, even though affordability remains part of the problem. So now, if you get a interest rate reduction, that will help spur this more. But a lot of people, I'm telling you guys, we don't want rates in the 5.5% tile tomorrow. We don't want 5% even flat tomorrow, next week. Why? Because it's going to bring everyone into the market all at once, and prices do what when that happens? They go up a little bit. Now, we have a lot of inventory to churn through. We have 24,000 homes on market, 4 months of supply overall in greater Phoenix area. So it won't be overnight. But man, hopefully, if rates do come down, they come down in a stepped, controlled manner. We're talking, right now, let's share the screen, guys. Here we go. I got them pulled up for you right here. Boom. Here it is, 6.2%. Now, if I pull this up and I go to rates here and I go to the 30-year, let's just go off of that. Okay. You get a bigger graph here. You can see the graph is going at that slow trajectory downward, which is exactly what you want. It's exactly what you want. Hopefully we can keep more of the same. And eventually by mid-year, we're around 6%. If we keep that same trend occurring, that would be phenomenal. Not too fast, not too slow. Just keep that trend going. It'll give buyers more confidence to jump in the marketplace to maybe buy a house. And if not, they said, you saw the prediction, rental rates will probably continue to go up. So you have that. Now, if you don't believe what AZ Big Media says, here's Realtor.com, as well as others, saying home sales to remain in low gear as balance holds overall. This is nationally. Remember, Zillow predicted 1.3% increase of home values over 2026. Realtor.com, they are saying, what are they saying? Prices rising 2.2%. So Zillow at 1.3, Realtor.com at 2.2% with their economist. And here's their forecast table. All right. They predict mortgage rates to be at 4.3% overall for the year. That's interesting, right? Currently, they average out to be 6.6 for the year of 2025. 2.2% home appreciation, 25, 2%. So it will increase nationally from the year over year, 0.2%. All right. That's what they're saying. Existing home sales up 1.7%. Thank the Lord on that one. That is a good thing. More home sales are good no matter what kind of market we're in. Existing home for sale inventory year over year will go up 8.9%, and single family housing starts will increase. This is good. 3.1%. We need that supply. Homeownership rate will decrease from 65% to 64.8%. Oh man, rent growth will be Oh, here we go. Everyone else is saying it's going to increase a little bit, but no, rent growth here declined 1%. Interesting, guys. Now let's go over here. I want to jump into an article here that I think this is interesting, right? We'll come back to that in a second. But here we go. Crystal ball 2026, according to the Phoenix Business Journal. It's about Valley real estate experts predict the housing market. So what are they saying? We know what AZ Big Media says when they pull from multiple different sources. We know what Realtor.com says now. What's the Phoenix Business and all their experts? What do they say for Phoenix for 2026? There's that vaunted crystal ball, guys. Don't you wish you had one of those? That'd be amazing. How much would you pay for that crystal ball right there? A lot, right? But unfortunately, none of us can get it. All right. So Phoenix, here's the highlights. Let's cut to the chase. Thank you, AI. Phoenix housing experts predict flat to up to 3% appreciation in 2026. Remember, Zillow at 1.3 nationally, Realtor.com nationally, 2.2% increase. And now we're saying Phoenix, 0 to 3%. Metro Phoenix median home resale prices reached 448. We know in November, they reached 455. End of the year in December, 455 median resale home price. Phoenix led 20 key cities with 0.43% price increase in October. Okay. So here we go. Spoiler alert. Here you go. Residential real estate experts are predicting more of the same in the Valley's housing market for 2026. Don't you love that? What a deflating, anticlimactic deal that was, right? But it's still going to have probably an increase in housing appreciation. Okay. So all indicators are pointing towards some recovery in the economy, and that's good for new homes, Daniel said. Daniel is president of, I believe, JDM Partners, which is like a big commercial think tank data, blah, blah, blah. Okay. Something like that. You guys get the point. All right. Home prices are what they are, and pricing is not really going to change next year. That's his take on it. So CoStar Group, Homes.com says consumer spending is expected to remain durable, and earnings disposal income growth is forecasted to continue outpacing inflation. Guys, if you want some good news, that is it right there. Wages outpacing inflation. That's what we need, because if more people have more money in their pockets, they can afford more of a payment, which means they can afford the housing prices where they're at today, or even they come down a little bit, or they go up a little bit, right? That's what we need. We need wage growth to outpace housing appreciation. Okay. It goes on to say, another expert here says all kinds of things, right? That's a decent housing market. Okay. I give the builders a lot of credit for everything they have done to get homes closed from COVID on. It's been nothing but changing strategies and adding new programs for home builders to actually sell properties, because it's been challenging out there, right? For first-time home buyers and move-up buyers alike, stock inventory and offering below market rates and closing cost assistance has allowed builders to maintain relatively steady sales levels. A steep decline in resales since mid-22 has not occurred in the new home market, not in Phoenix. It hasn't in Phoenix. Okay, so here we go. Last paragraph. Phoenix still looks pretty weak over the past 12 months, but the trend over the past 2 months, which is very true, guys, I can attest to that, is surprisingly strong, at least relative to the rest of the country. Something to make us perhaps feel a bit more optimistic as we hit the end of 2025. Guys, that is dead on. Let me tell you right now, from boots in the trenches, helping clients out, people calling us, phone ringing, not ringing, I can tell you what's really odd at the end of 2025 is that typically out of September through December, September, October are the busiest 2 months out of those 4. That was not the case this year. In fact, December alone by itself was the busiest for us and many of my real estate colleagues that I speak with on a frequent basis than the other 3 months combined towards the end of the year in 2025, guys. So what does that mean? I don't know. Obviously, the weather is good in Phoenix that time of year and all that fun stuff. But does that mean we have some more momentum that we typically won't have or typically don't have heading into the next year? I hope so, guys. And if the first 6 days of January is any indication, we are. Because, guys, even the first 6 days of January, we have been rocking and rolling here in Phoenix. Seriously, I mean, it's been busy. I am not kidding. From just boots on the ground, working with clients, gauging how it's working. Okay, so we're gonna cover a few more things here, guys, because there's a few more articles I want to cover because it's interesting. One of these is this. Okay, Arizona sees surge in ultra luxury home sales above 18 million. What? 18 million. Okay, before you click off, let me show you this this stat right here because this is very true. Here we go. Look at this, guys. The annual change in the average price per square foot by list price range. Look, what do you notice? What do you notice? Come on. Somebody put it out there. Don't make me talk to myself for 20 minutes straight. Okay. The luxury home market is doing very well. The super ultra luxury home market doing very well, or did, I should say, year over year from January 1 of 25 to January 1 of 26. But under $700,000, look what happened. It went the opposite direction. So when you talk median home price, does that luxury home market affect that? It does. Absolutely. Average, it affects it big time. But we also had a negative on the lower price point homes. So the median still is a very accurate depiction of where prices stand today. Okay. But that's something else. So like if you are somebody who can afford a house between, I don't know, 350 and 400 or 500 to 600, prices have come down over the past year. And so there could be some weak spots in certain niches, neighborhoods across your suburb, your city you want to live in. And we happen to know a few, by the way. We definitely happen to know a few. Call your real estate professional. Call us. You can see the number below, 480-660-5974. We would love to chat with you guys. People reach out to us all the time. You are not a burden. We would love to work with you and help with you from that scenario, put a game plan together for you. But that is interesting information, in my humble opinion, which coincides perfectly with this article title right there, because the ultra luxury home market is booming and has been for this past year of 2025. Okay, this is also interesting. The housing market's new deal breaker is likely to get worse before it gets better. What is the housing market's new deal breaker? Well, it is no other than homeowners insurance costs. Oh man, I love you, Jason. You're like, I gotta put it out there because this guy is one of my dudes and he's funny, and it's the lighting, I think. And even then, it's not that good. So, but thank you. I appreciate that. I will tell my wife that you said that today, and maybe she'll be like, "Yeah, I see it too," and really help me out with my ego. Thanks, LaFlesh. I appreciate you. Thanks for commenting, buddy. Okay. So homeowners insurance continues to be a problem, guys. National premiums rose 8% to $35.25 in 2025. 2/3 of homeowners saw insurance premiums increase in 2024, and they're causing affordability problems, guys, because when insurance goes up, that's all part of your monthly payment, and that's part of your debt to income ratio when qualifying for a mortgage. And frankly, it is a flat out monthly payment, and that's part of your monthly payment. And so when the homeowners insurance goes up that much, this is a problem. All right. So, and by the way, there's no sight of this changing anytime soon, unfortunately. I think it's kind of like the airline bags, right? You know, these airline bags, when the barrels of oil went sky high, they started charging everybody for airline bags. And by the way, what they say the reason was? They said it's because the extra weight in the airline, it cost them money. So they charged us those fees. Well, unless you fly for Southwest, which they just changed their policy too on that, by the way, but they haven't. I mean, last time I checked, barrel of oil is way down over the past 3-4 years, whatever. Okay. And the fees still there. Yep. So this is like homeowner insurance. I don't know. It could be a new norm. So if anything, I would just anticipate it, guys, to be a plateau. And this is the new norm. And you just got to deal with it. And it's not going to go away most likely anytime real soon. I'm probably more bullish on that prediction than I am anything else. Okay. So here we go. A few more things, guys. Fun things to go over. Oh, real quick. We talked about listing inventory. Guys, I have to show you this. Guys, look at the inventory every single year except for 2023 in the pink. It actually oddly went down at the beginning of the year. But typically, when the year starts, inventory goes up, and it did in 25, and it most likely will in 26. It did also in 24, just not as steep. It typically peaks somewhere around April or the 1st of May. And then, I'd be remiss if I didn't show you this, pending listings also increase, meaning demand increases typically to meet the extra supply, which is great, right? Play with me. Here we go. There's 2024. Same trend, right? 23. Oh, boy. We are looking eerily similar. 22, even more similar. 21. Holy crap, guys. Every year, it's almost like this, guys. People want a piece of Phoenix. They want a piece of whatever suburb you live in that you like the best, and they want the weather, and they come down to buy some of it. Every year, guys, pending listings means demand. So even though we have more supply coming on the market, people are going to come down and buy in Phoenix unless something really weird happens like COVID. Let's check out 2020. Oh, even in 2020, up until March, COVID hit March, right? 2020. Then what happened? Boom. It only went down for 1 month, guys. One lousy month. And then what did it do? You see the brown line went right back up and then up again. I mean, this is the Phoenix housing market. Okay. So, that being said, if you are someone waiting to buy, you might want to wait until the summertime and then see how it folds out then. Because over the next 5 to 6 months, if you're waiting for that good deal to happen, they're out there. Don't get me wrong, they are out there, but they're few and far between. That's all I'm saying. Okay. And then last but not least, average cumulative days on market. Guys, this is interesting. We are sitting now at 84.6, 85 days on market to sell a house on average in Phoenix currently as of today. All right, a few more fun facts here, guys. This is good. Boeing Mesa's operation lands a $2.7 billion Army contract for the Apache helicopter support services. Okay, so that's really good for the local economy, especially in Mesa, right? Boeing just landed $2.7 billion, guys. That's not chump change, and they build those suckers right there. There's the attack helicopter that we all know. They build those right there in Mesa, Arizona. Thank you, U.S. Army, for that in our local economy. Guys, it employs nearly 50,000 workers in Arizona and has produced nearly 3,000 Apache helicopters since 1975. Hopefully the technology picked up a little bit, even though, since 1975. I'm sure it has. Okay, last but not least, this is a fun one, guys, because I'm a football guy. I'm a football guy if you follow this channel at all, and hopefully some of y'all too. But guys, the Fiesta Bowl right here in our backyard of Phoenix, Arizona, they are playing the college football playoff semifinal game this Thursday night right here in Glendale in the State Farm Stadium where the Cardinals play, Arizona Cardinals play, which they had an abysmal season, so we won't talk about that. But they play here, and it'll be a good game, guys. Ole Miss faces Miami, so the SEC and the ACC colliding for the chance to go to the College Football National Championship game on January 19th. Dierks Bentley, Arizona's own Dierks Bentley, will perform a pregame fan fest at State Farm Stadium. If you're thinking about going out, get some tickets. Guys, I went to the Fiesta Bowl last year when it was Penn State and Boise State, which was a quarterfinal matchup, and it was glorious. It was awesome. So much fun. Took my boys with me, and it was a blast on New Year's Eve. So if you are thinking about going out there this Thursday night, you're going to have a good time. Stay safe. And who are you rooting for? Guys, I used to coach Ole Miss. Fun fact, I coached football at Nebraska and Ole Miss 1 year each, and both years the head coach was fired. So I jokingly became the kiss of death for a head coach, which I guess I don't know if it was my fault or not, but because when the head coach is fired, we're all fired. So I got fired in 2003 at Nebraska. I got fired at 2004 at Ole Miss, and Ole Miss is back. Nebraska, not so much yet, but I'm praying. There's my Legends right there, jersey in the back. I'm praying it happens here sooner than later because we've been waiting a long time. But because I coach at Ole Miss and I have a soft spot in my heart for a little hottie toddy, good gosh almighty, Ole Miss, right? You know the fight song, guys. If you don't know it, you should look it up. It's pretty cool tradition. I'm rooting for Ole Miss. Go Rebs. Go Rebels. Win that game. All right, guys. Thank you so much for your time today. And put down below who you're rooting for at the Fiesta Bowl, please, if you're watching this, or who you're rooting for to win the whole thing, if it's not one of these two teams. And I will see you next Tuesday, 4 p.m. local time, right here on this channel. Be there, be square. And until then, Phoenix, keep it classy.